But basically, the thesis was that Strategy has a software company that basically breaks even, if not generates a modest loss. So the proceeds that they're using to buy Bitcoin is they're doing it through share issuance, they're doing it through the issuance of preferred stock, they're doing it through the issuance of debt. And that worked for a time because Strategy shares were selling at a very large premium over their per share value of their Bitcoin holdings, which is really the only value of the company. Again, if they have an operating business that's not making money, there's really no value there. There might be some liquidation value, but there's really no value as an ongoing enterprise. So Strategy is just one big bet on Bitcoin, and this worked for a time. I think they own like 3% of all outstanding Bitcoin or thereabout. But it was working for a time because Strategy shares were selling at 2 to 3 times the value of their Bitcoin holdings. And because the stock was so expensive, it was basically, in other words, selling at such a high multiple of their Bitcoin holdings, it was basically a very cheap currency. So Saylor was able to use that currency, issue more stock, buy Bitcoin, and for a time looked like a genius, and it started to really unravel